Hello and welcome to Rajya Sabha Television. You're watching The Big Picture with me, Frank Pare. RDAI on Friday approved LIC's plan to buy 51% stake in IDBI Bank as the insurance regulator gave the insurer exemption from the 15% investment cap. The Life Insurance Corporation of India is expected to invest 10,000 to 13,000 crore rupees in tranches in the NPA-mired state-run lender, according to media reports. The insurer will pare its stake in the bank to 15% in 5 to 7 years, according to a PTI report. The valuation will be decided as per Sebi regulations. Post the deal, the government stake in the bank will fall below 51%. The government currently holds 81% stake in the bank, and the deal may involve both real estate and non-core entities of IDBI Bank. LIC has a 10.82% stake in the state-run lender. On this edition of The Big Picture, we will analyze the LIC IDBI deal. Joining me on the program today are Shubhamoy Bhattacharjee, consulting editor of the Business Standard; Nanendra Kumar, former executive director of the World Bank for India; Santosh Kumar Mehrotra, professor economics, JNU; and Ajay Dua, former Secretary, Ministry of Commerce and Industry. Thank you to all my guests for joining me on this edition of The Big Picture. Mr. Dua, let me begin with you first. What do you make of the LIC IDBI deal?
On paper, two independent bodies, they can take a call, and all that they needed was to be on the right side of the law, which LIC, by seeking the permission of IRDAI, the insurance regulator, whose permission was needed if any investment by an insurance company in any company is more than 15%, it needed IRDAI's permission, which it has obtained. So on paper, it will look all honky-dory, but the two or three moot questions come to my mind, are questions which arise. One, should LIC be using policyholders' money in an entity for which there were no takers? Till recently, the government, which now actually Frank holds 85% equity, not just 80, because it's certain amount of money was equity was given to them recently. Taking that into account, it becomes 85%. There were no takers for it, and we all know that the losses of IDBI have soared from 21% in the previous year to 27.65% in the current year. At NPAs of 55,000 crores, it is, I don't know whether LIC is really acting prudently, investing policyholders' money in an entity which is not doing well, in which there are a whole lot of issues, including managerial issues, because it is a different kind of a PSB, not covered by the Nationalization Act, because this was formed only about 10 to 12 years ago when the term lending institution IDBI and IDBI Bank, the two entities, got merged. The market hasn't responded to it well. So I wouldn't think that while legally they might be all right, whether what is happening is a right step by the LIC.
Okay.
For IDBI, it might be a windfall, but at whose cost? And that is where the question arises. Are these two bodies actually acting independently, or is there someone driving them, and a common owner of both of them is the Government of India?
Sure. Okay. Let's try and see if we can get answers to all those moot questions that you raised in your opening remarks. Starting first, Professor Mehrotra, let's talk about the first moot question that Mr. Dua put forth in front of us. That is, should the premium money of citizens be used to fill fiscal gaps?
Well, my flat answer is no. I mean, it's very unfortunate that we have come to a pass where this seems to have been a last resort decision. What were the alternatives? We are never told outside of these two organizations what is the alternative, what could other alternative methods would have been adopted. I mean, honestly, we have been hearing for some months now that the governance of all the public sector banks is going to be improved, and that was what I thought when the package was announced about 6 to 8 months ago, that was going to be the first step. In any case, that's a step that should have been taken some 3 or 4 years ago. It wasn't taken then. But in the last 6 months since these bailouts have begun, even after that, the governance reforms don't seem to be happening. All that has happened is the PCA, meaning 11 banks have been put under prompt corrective action, which is fine. But you know, where is this process going to end is what I'm wondering. I mean, I'm at a complete loss as to why alternative measures were not considered and why governance reforms have not begun. Because as of now,
Professor Mehrotra, I'm sorry to cut you short. You're talking about alternative measures.
60% of all credit, and I'm finishing.
I'm sorry to cut you short. You're talking about alternate measures.
Sentence, if I may.
What could they be? What could they be?
Well, I'm suggesting to you that they should have begun with governance reforms long back and let the other panelists speak about it, because there's no transparency in all of that, what is happening.
Sure. Okay. Points taken. You know, the banks should talk about governance first. Better governance is the real way forward, is what the professor of the program is suggesting. Let me go across to Mr. Dhanendra Kumar now and see what he has to say about this. You know, Mr. Kumar, do you see the LIC IDBI Bank deal or the experiment working, or what's it going to take for it to work?
Thank you. In my view, as I see it, this particular investment is not an investment in the sense that it is either meant to bail out IDBI or it is to fill in the gap in statutory adequacy ratio, capital adequacy ratio and so on. I consider it as a strategic investment by LIC. These days the bank assets are undervalued. They are available at a very discounted price. Now the government wanted to divest its shareholding in IDBI, as I understand, and the government's own disinvestment process is a bit long and complicated. If LIC were to buy it and LIC were to divest it thereafter, it would be far simpler and easier. And in my view, it would probably a win-win situation for both the shareholders of the IDBI and also the LIC, because at the end of the day, if we are in a position to get a good deal for IDBI, it would be a good investment for the LIC. LIC is not in the business for a short-term investment, it is there for a long-term investment. Also, LIC is not buying it for the sake of running it or for acquiring a managerial control over it, but once acquired, they would have a few directors on the board, and possibly the government and LIC would make sure that there are substantial improvements in the management practices, and the management and running of the IDBI Bank as such is brought to a much better level. Maybe there would be investment in IT and a variety of other technology ways, whereby its total dealing with its customers could improve. LIC could also benefit by way of sale of its policies through the banking channel. These days, it's a normal norm for the insurance companies to enter into a deal with a bank for the sale of its policies.
Okay, points taken.
Altogether, I take it that it is going to be a strategic move by LIC, and that probably is one of the reasons why IDBI has approved it. And now, of course, there would be further approvals needed from RBI and from Sebi. And we must remember that...
you know, Mr. Kumar, let me take the points that you're making to the others as well.
Shares.
Sorry to cut you short. Let me take the points that you're making to the others as well. Mr. Dua doesn't seem to agree with what you're saying. You know, Mr. Dhanendra Kumar is calling it a strategic investment. He's saying that LIC has a lot to gain from this particular
The points
deal
being made by him, from what I could capture, are twofold. One, that investing in banks, public sector banks, is a good thing if you're getting them at a value. And secondly, they are providing you a distribution channel for policies. On the first point, I think LIC is already a holder in 10 PSBs. This would have been the, or would be, this would be 11th. It's already holding 10% in this. If it increases to 51%, but LIC of late is selling, diluting its stake after seeing the PSBs, NPAs go up and the market taking a hit. So it's actually making an exit. Exit is because it is afraid that it's not, these banks are not going to do well, so let me exit before they run to the ground.
Okay.
Second point is distribution channels. Distribution channels are required by the new 21 insurance companies which are in the private sector. 84% is the market share of LIC in the life insurance business today. 84%. 16% is all that is held by the 21 insurance companies. They, rather than the LIC, needs distribution channel of banks.
Okay. Okay, let me bring in, Shubhoy Bhattacharya, who's been patiently listening to all the three other panelists. Mr. Kumar, I know you want to have a say as well. I'm going to come back to you, but before that, let me just hear what Shubhoy has to say. You know, does LIC stand to gain from this deal, Shubhoy? That's what we are debating right now. And what does it stand to gain, really?
Not in the near future. Definitely not. Of course, today the markets reacted positively, but that's because those who are holding the IDBI shares found that there's an appreciation. The shares prices of IDBI has run up, but that is more just sort of correcting for the losses that the bank was basically doing. So that's nothing. I broadly agree with what Mr. Kumar, what Mr. Dua and Mr. Mehrotra is saying. Essentially, that you do not need. I mean, I wouldn't say that a PSU cannot buy into another PSU, but first of all, there has to be a pretty clear enough reason why now. What was the logical reasoning which went into it, and whether it makes sense? Because some months ago we had a buying out of HPCL by ONGC. Now it had the same problem, that it actually starved ONGC of funds by soaking in 34,000 crore. Here also, it's not that ONGC LIC will be starved of funds, but the point is that a reconfiguration of IDBI needs a very good understanding of why it needs to be done. And if it's to be done, then who should carry the pail? If it needs to be closed down, which is quite a possibility, then all those alternatives need to be brought up and discussed threadbare. I understand the government has a problem. The government's problem is that in the last budget, not this budget, the budget before this, they announced that IDBI banks will be the first case of privatization of public sector bank. Now, their government, if it doesn't do it now, it runs the risk of a parliament censor, that if it doesn't do it. So this was probably the proximate reason why they sort of, brushed it through. But it doesn't help. Obviously, LIC, as Mr. Dua is pointing out, has got enough amount of distribution channels not to depend on 1900 branches of IDBI to be able to sell its bank assurance product. The other big problem with LIC is that LIC now becomes a banker. I understand ICCI also has got an insurance arm, ICCI Prudential and ICCI Lombard. But if that is the case and LIC wants to get into it, then was IDBI the best bet? There are other banks also in the market. There's and some of them in pretty good, comfortable distributional net. Would LIC have been better looking at those banks?
But LIC has already looked at all of those banks. I mean, 10 of those public sector banks.
That's the point. Those
private banks.
Those banks it is picked up as a market investor. But if it wants to pick up a majority stake, a strategic disinvestment, as Mr. Kumar is pointing out, then was IDBI the best bet?
Okay.
We do not. These things have not been done. It's before anything has been done, the decision has been done and dealt with.
Sure.
And so it looks more like an issue to ensure that there's a parliament, that the government doesn't fall foul of a parliament, whatever it's called, commitment, or what is the word? I mean, commitment to a budget commitment.
It's a budget,
and that's
budgetary announcement,
and that has to be gone through.
Okay, let me go across to Mr. Kumar
why
now.
It can't do it.
Let me go across to Mr. Kumar now, and you know, a couple of fundamental issues being raised there by the panelists, Mr. Kumar. Shubhoboy Bhattacharjee, of course, questioning the timing of this deal itself and why it should have been done so hurriedly. And could LIC have not found a better bank or a better entity, is what he's asking.
Well, I'm not a spokesman for the government in order to answer these questions.
Certainly.
Of course, they are valid questions which are agitating the common man's mind. But I feel that government is fully committed to, IDBI is a public sector bank fully owned by the government, I mean largely owned by the government, to protect the shareholders, to protect all the depositors and so on. And the IDBI Bank, similarly LIC, so LIC is owned by the government 80% and so on. So government would make sure that LIC doesn't go down under any circumstances. So what LIC is investing today is a short-term arrangement, as I said, a strategic move, and it is not designed for any way which some of the people who are doubting this investment, the reasons is going to be there. And in any case, I am very confident that government is going to make sure that the policy holders, they don't lose their money. At the end of the day, I feel that everybody would stand to gain because of already the shares of the IDBI, they have gone up by almost 10%. LIC has been holding about 8% plus shares in IDBI Bank. Government also holds almost 80% shareholding in the IDBI Bank. But after this strategic move, strategic investment, once the shareholding goes up, and after all this, the valuation of the shareholding would be as per the Sebi norm, I think there would be net gain to the LIC shareholders. So I don't see that there is going to be any loss or any adverse reaction to both these institutions, LIC or IDBI,
okay,
in the end.
Sure. You know, Professor Mehrotra, did IDBI, need a bailout in the first place? Should we bail out entities that are not performing well? There are several banks that make the list. IDBI could be on top of that particular list. Should we continue to bail out these entities, or should we let them go at some stage?
Well, IDBI seems quite clearly the worst of the lot among the public sector banks. Its sort of NPAs are of the order of 27% of loans and advances. I mean, way above what the situation is with the other banks. So clearly, at some point, something has to happen. And those some things could be one of several things. One, as you're suggesting, that we let go. In other words, we close it down, or we just sell it at a massive loss, or we consolidate it with other banks, and all the staff that you have in the 1900 odd branches actually get absorbed into or given voluntary retirement. Because unless you shed the massive numbers of staff in these organizations, there is not a hope in hell for a long time to come that these banks are going to turn around. Point one. Point two, governance reform are not happening. Where is the talk about governance reform within the banking sector? I mean, what is the issue? What is the problem with actually implementing governance reform? And none of my other panelists answered the question that I raised about why are governance reforms not happening. All we are attempting to think about, let's make a strategic buy here, let's try and put in some more money there. Let's put them onto some prompt corrective action 3.5 years down the road, when your NPAs were rising from 1.5 lakh crores to something like 11 to 12 lakh crores. I find this an utterly bizarre situation, which is a recurrence of what happened about 18 years ago in the wake of the 1997 Asian economic crisis.
Okay, Mr. Dua, do you want to answer Professor Mehrotra's question? Okay, Shubhamai wants to go at it. Yeah,
there's something about the IDBI Bank that we should also know. There's quite a bit of politics also there. Now, why am I saying this? Because the IDBI Bank, it's not just one of the 23 public sector banks. IDBI Bank's managing director and CEO, Mahesh Kumar Jain, who was appointed last year, has now taken over as Deputy Governor RBI. Now, obviously, the performance of IDBI Bank has not really colored his position as appointment to as Deputy Governor of RBI. Not only that, a couple of days ago, State Bank of India's managing director, Mr. B. Shriram, has taken over as the IDBI Bank chief. The government, I would agree to some extent with what Mr. Kumar is saying about the fact that the government is obviously looks at IDBI Bank as a particularly significant one. To manage, the bank isn't doing well, as we are all agreed, but the top management of the bank, the government is putting a lot of people there whom they have a lot of faith in. And Mahesh Kumar Jain, as the Deputy Governor at RBI, will be looking at a bank and he'll be actually deciding on that bank. He's shifted. That's exactly the point. But there's going to be that. Then Mr. Shriram comes in from State Bank of India, who was just second to Mr. Rajneesh Kumar to take over as IDBI Bank. IDBI Bank is much smaller entity, but he's taking it over. So there is a lot of, there must be a good reason why he has been asked to take over. So I would say that it's not, so there is a lot of stake rising in it. But if that is the case, then that makes it even more necessary, as Mr. Dua and Mr. Mehrotra was pointing out, that probably we should have had a bit more of, in the informed circle, a bit more of discussion on why was it necessary that this bank, when all the other banks have issues, and as governance issues Mr. Mehrotra pointed out, why do these things, why are these things coming up together? What are the implications? Why is this bank particularly being singled out?
Sure. Yes, Mr. Dua.
I don't read much significance in the choice of these two persons, Mr. Jain, the ex-managing director moving as the deputy governor, and a State Bank person coming in here, because State Bank is now the supplier of all senior bankers in the country. Of the 14 banks or 14 new people who've been appointed, as many as 6 have come from just one bank, the Banking Bureau's recommendations, because that is the largest bank, that's the better run bank, so it supplies manpower. And so I think that's
tried and tested at the end of the
coincidence. I wouldn't see there is any strategy behind that. But what I would want to say is that governance reforms, which Professor Mehrotra is talking about, is something which was attempted for last 3 years under the so-called Indradhanusha program of the government administered by the RBI. Said every time capital infusion of the government takes place, it will be conditional upon certain reforms taking place there. Obviously, the government kept putting in the money. So I do guess that some monitoring of that reforms was taking place. But all those reforms, I'm sorry to say, as long as you remain under the government fold, and the way the RBI has been also looking at banking operations, have been incremental in nature. Not a single drastic reform. And the biggest reform which we've been all talking of for years together in the PSBs is that please bring down your holding significantly to allow private management. Not that private management, now that we know some of what's been happening in other banks as well, is going to improve everything drastically, but the control of the government would come down. And the government, as we all recall, took over these banks under special circumstances in 1969, not with an intention to run them for 60 years thereafter or 50 years thereafter. It did want to get away from them, but it got stuck. Having said that, all that I would want to add here is that the LIC seems to be becoming, like RBI is the banker of last resorts, LIC seems to be becoming the bailer of last resorts for governments.
That has always been.
ONG, I would want to give an example.
Which is a bad example.
When the Coal India's IPO was bombing 6 years ago, who bailed out? LIC. ONGC's IPO was bombing. Government, whether LIC on its own suddenly wakes up to perform the role or it's asked to do, that we don't know. I think it's exactly the same situation.
Okay, I've got limited time now.
Absolutely.
Limited time on the program, so I'm going to get closing comments from all my guests. 1 minute to all of you, of course. I've got 4 minutes left on the program, starting with Mr. Dadendra Kumar. Mr. Kumar, what happens if LIC gets into trouble?
Well, as I said in the beginning, LIC is a very prestigious institution, 30 lakh crores, 35 crore policy holders. Government is fully behind it. So I am very confident government will make sure that LIC doesn't go down because of this. The other thing is that it's very important that after investing this money, about 10 to 13,000 crores, what is the timeline and the process for divestment of this strategic investment, and the changes in the management and the investment in technology and other practices, the better practices in the IDBI system, so that the value is realized from this trouble-ridden bank.
Sure.
So much remains to be seen, and the next year or two after this strategic investment would probably unfold what is in store for us in
Next
this.
2 years are crucial is what Mr. Kumar is suggesting. Professor Mehrotra, the term bad bank has been used often over the last 1 month or so. Is LIC the real bad bank?
I'm afraid not. That would be a terrible decision. The bad bank is a bad idea. The only way forward is for the NPA crisis to be dealt with on the basis of market-based solutions. Mr. Ajay Dua, I think, hinted towards that. Because honestly, let's just, and I'll just take half a minute here. Air India has been run into the ground over a 50-year period, and now there are no buyers for it. Do we want each of these banks to go exactly the same route? I mean, surely when there is some life left in these organizations, can we begin to sell over a period of time? The government dilutes its shareholdings. The market-based solution is if these banks don't face the music from the market, their officers and their staff will behave as incompetently as they've been doing for decades.
Point
and
taken.
This is an unacceptable situation that my taxpayer money and your taxpayer money should be bailing these people out who are grossly incompetent, and many of them are grossly corrupt.
Okay, sure. Shubham, my closing comment from you. Interestingly, Professor brought up brought up Air India. There are several reports that suggest that LIC might bail out Air India as well. Is that something that we are going to see, and is it a good trend?
The biggest challenge is LIC is now a bank, in the sense that it runs a bank. RBI is the controller for the bank. On LIC, if LIC is taking a decision on IDBI Bank, would RBI be taking a decision, or IRDAI will be taking a decision? It's a huge regulatory challenge that will come up very soon. Okay. And we are creating a new mess.
Okay. Mr. Dua, close the show for us with your concluding remark.
I would think that rather than LIC investing into IDBI on its own or being on somebody else's valuation, this is a time to look at IDBI's merger into another PSB bank, which might be doing relatively better, rather than our trying to keep LIC afloat with its few hundred branches and loans, etc. Sorry, IDBI, keeping that afloat. This necessity is, as they say, mother of all kinds of actions, and the time has come here that rather than using public money to bail out IDBI, let the government now take on the onus upon itself and merge it with a healthier bank in its scheme of things.
Okay, mergers, consolidation is the way forward, is what Mr. Dua is suggesting. Remains to be seen, of course, what really happens in the days to come. As far as Professor Mehrotra is concerned, he says governance is the way forward. On that note, we'll call it a wrap on this edition of The Big Picture. Thank you to all my guests for joining me on the program and putting things into perspective for us. That's it from me. See you again next time.